Markets are falling a little bit, but we're not seeing intense volatility like Gareth Soloway, chief market strategist of InTheMoneyStocks.com, has been calling for. Gareth, welcome back to the show. Now, you and I are going to be talking about the markets. We're also going to be playing the chart game, which we did last time, but with the twist, this time you've pledged to donate to charity, a charity of your choice if you win the game and make money. If you lose, then I get to pick the charity. So you're donating $1,000 to a good cause either way. Is that correct?
Absolutely is correct. And fun to have a little money on the line.
All right. Well, I appreciate it. I'm sure our viewers will appreciate it. We'll get to this at the end of the segment, so stay tuned until the very end. First, let's start with a market update like we always do. Gareth, today's action, not a lot of action, but how are you playing it?
Yeah, so today we're just seeing a little bit of a pullback in the markets. If you looked at Friday's action on the intraday, in fact, I'll flip over to that screen for you guys now. You can see on the spiders, we had that late day big surge on my 10-minute chart here. And we're basically just erasing the last 10-minute candle on the day. In fact, we're literally within pennies of just erasing that. So it's a small pullback day, kind of a pause day. I think the markets are focused on a few other things, but for the most part, it's end of quarter potential window dressing. So that could keep a little bit of upside going in the markets.
Okay. Now, I will draw your attention to this clip of Janet Yellen testifying to Congress last week. She talked about taxes. You have been saying that we are getting a tax hike, and you have been saying that investors should be concerned about this. Let's listen to the clip first.
No, the stimulus package, the American Rescue Plan, was not funded with any increases in taxes, but a longer-term plan that addresses critical needs of this economy probably would be accompanied by some revenue raisers.
So, Gareth, you've speculated for a while with me now that this year we could see hikes in taxes, which would damage the markets or at least hurt sentiment. Now, Secretary of the Treasury Yellen has straight up said that this is a possibility. So this is not even a speculation anymore. But why haven't the markets reacted negatively to the news?
Yeah, so that's definitely key. And I think the markets are waiting for clarity on it. The question is the corporate tax rate going to go to 25% or 28%? I'm also curious to hear what the long-term capital gains tax could be raised to. I think if you get a raise in the long-term cap gains, let's say starting in 2022, you could see major selling and profit taking into the end of this year as well. But this is a situation where, to me, the markets are in a topping pattern. You're seeing much the same type of top that was created in the late 90s, early 2000 period, where the markets have a rounded top, where you have distribution from institutions selling while small investors continue to put record numbers of inflows into ETFs that track the market. And it's a death by 1,000 cuts. I mean, you have interest rates inching up, then taxes are going to go up. Ultimately, it will take down the markets, but there will be a tipping point where that starts.
Okay. Tipping point where that starts. Is that solely going to be driven by tax hikes, or could that be driven by something else?
It could be almost anything. I mean, the amazing thing about it is just since Friday, we've learned that a big hedge fund went belly up. They over leveraged themselves. It caused these Chinese stocks like GSX and VipShop and Tencent to collapse massively. I mean, we're talking about almost half the value on these names wiped out in a matter of a couple days. Viacom, CBS got absolutely annihilated. Those are type of black swan events that could be something that could roil the markets. And then if you add in, let's say interest rates all of a sudden start to move towards 2%. We hear from Biden this week on the stimulus, on the infrastructure stimulus plan, and there's a tax, multiple tax raises in that. It's at some point going to create the tipping point where I think that small investors will start to step back. And let's be honest, small investors were buying Viacom near $100. I mean, small investors were buying many of these names that have taken major hits. They're starting to get a little skittish, and the institutions have used their inflows to deleverage themselves and without causing the markets to collapse.
Well, let's go over some of these stocks, these Chinese stocks, Viacom, that you mentioned. Are these company-specific events? It's not a macro factor, right? Pushing these stocks down?
Right. So Viacom, US, Viacom, CBS. I mean, here's the chart on that stock. You can see the massive decline that it's seen. I mean, this stock was literally $100 by, I think it was Tuesday or Monday of last week. And by Friday, it hit a low below $40. And again, we're talking about Viacom CBS here. They own CBS, they own Showtime. I mean, this isn't a small minor stock. In fact, many people look at this as a value play. They pay a dividend. There's consistent on earnings. I think even now the company's trading at around a 12 future PE of 12, which is very attractive at these levels. But the thing is, when you get these deleveraging events, the funds, these hedge funds that have billions and billions and billions of dollars, they don't get a choice. The broker comes in and says, hey, listen, you're going to cost us billions of dollars. We're going to sell you out automatically, and they dump everything. And we actually heard today from Credit Suisse that Credit Suisse may be taking a multi-billion-dollar loss because of losses incurred by this fund as well.
Okay, well, I'm looking at the NASDAQ index, and the NASDAQ hasn't really moved down at all, even though Viacom is traded on the NASDAQ. So this does appear to me like a company-specific event, but can it have ripple effects on the rest of the index, Gareth?
It absolutely can. And I think that's what every intelligent investor and trader is watching right now. We want to see if this is a very isolated incident where it's not going to spread to other funds that were over leveraged, or is it kind of the beginning of a fire that's going to spread very, very rapidly? And if it's a fire that spreads rapidly, that's where at some point the markets start to really panic. Because again, as these stocks drop, and again, you can look at charts like TME, just incredible drops. These are names, and GSX is another one that's been absolutely annihilated. These are stocks that right now aren't a major player, but if you start having stocks like Disney or Apple having to be deleveraged because these funds have big positions they have to unload, that's where the market will absolutely get hammered in the future. So it's something we have to watch. We'll know in the next 3 days, in my opinion. By Wednesday, if we haven't seen any contagion, then we're probably safe. But it could be crazy.
Contagion. Okay, it could be crazy. What kind of craziness are we talking about, Gareth?
Well, I mean, you see individual names, and even a name like Viacom or Discovery, which has, DISCA is the symbol on that. And they basically have Discovery Networks, and they have a streaming service just like Viacom CBS does. I mean, when you see these, relatively good quality stocks drop by this much, I mean, just imagine what an Apple or a Google or an Amazon could fall by. And those are the ones that have the huge weighting in the NASDAQ 100 and the S&P 500, where you could be talking, if there was contagion, 10% down on Apple in a week would not shock me in that situation. Now, again, let's keep our fingers crossed that doesn't happen. I'm hopeful that the Fed, I heard the SEC is monitoring the situation as well. But certainly it is something that we all as investors have to just be aware of in case it starts to step out of the way. Now, last thing I'll say here is that some of these stocks actually look attractive to me. So like, for instance, a Viacom trading at a 12 PE down here hit major support. You can see a good support line right here that was tagged. Yeah. There's good support right down here. These are probably due for a bounce. I'm also a fan of GSX down here. GSX has gone from $90 to $34.50 in just a week. So you likely, assuming there's no contagion, these are names where you could get a quick swing trade bounce and make potentially 20% or more in basically a couple days, if there's no contagion.
All right. Okay. I know two things that stock traders hate the most: higher cost of capital from higher interest rates and higher taxes. How likely is it that we're going to see a double whammy of both?
I think it's inevitable. I mean, the printing of money has got us in a situation where, not only do you have to raise taxes to pay for this printing of money, but then you also create the inflation scenario where that interest rate is going to be driven up because of it. I mean, remember, interest rates, other people are borrowing or buying our bonds, and the less likely they think we're going to pay them back because we're just printing massive amounts of money and basically reducing the value of our currency, the more likely they say, okay, well, if I'm going to, take on this bond of yours, you guys have to pay me a higher interest rate for that risk. And to me, it's going to be the double whammy. I do think that at some point this year, all the T hits the fan, and I think you'll see at least a 10 to 20% drawdown in the S&P and likely in the NASDAQ. Let's
watch out for that, and we'll follow up in due course. Gareth, let's talk about commodities now. I know you have views on commodities. We'll start with the precious metals, and we'll move on to a few others.
Absolutely. So gold, I'm still a big fan of gold. You can see here, it's tagged that support line. We talked about this, I think, the last time I was on a couple weeks ago. This key support. You have this downsloping trend line. You have this flat box trend line here. So that's your key. You're pulling back a little bit over the last few days as you're seeing consolidation in the metal, but I do think you start to turn up for another leg up. And again, I've talked about this over the last 3 months or so. This retrace on gold is a perfect mirror of what we saw the last time gold took out its highs in, I think it was 2008 to 2011, that period where you pierced the recent highs and then did a retrace back down. And I expect that exact same kind of Fibonacci point 386 retrace to hold true. So I'm a big fan of gold still. I think, again, the more risky you get on tax hikes and inflation, you want to make sure that at least some of your portfolio is allocated to gold.
How do you feel about oil?
Yeah, oil's an interesting one. So we know the Suez Canal situation happened. It looks like they just got that big ship refloated. The USO is kind of a
prices went
wacky
down
chart.
today a bit.
Yeah, exactly. We're basically flattish to neutral on oil right now. It was down a little bit earlier. To me, this looks like a bear flag, forming after this drop. So to me, that's bearish. You could also make a case that you have a little bit of a head and shoulder pattern here forming with a neckline right in this vicinity. So look for a breakdown. For me, I have a target on the USO over the next, I would say next 6 weeks or so, down to about the $36 level. So there's another, it looks like about 10 to 12% downside on oil over the next 6 weeks. For me, that's how I'm playing it.
Gareth, let's talk about the geopolitical ramifications of the Suez Canal. I don't want to call it a crisis, but this event that's going on right now. It seems like a choke point of this magnitude for this amount of time does have significant impacts on not just commodity prices and perhaps inflation overall if this does prolong. I mean, I've been reading various conspiracy theories as to why this has happened. This one doesn't seem like a conspiracy theory. This one just seems like data. Let me just show you. I mean, you've probably already seen this. It looks like the ship, before it crashed, it was sailing in the ocean, the Evergreen, and it was drawing what appears to be a phallic object. This seems to be too intricate to be a coincidence. I mean, look, what do you think political leaders are thinking right now? They're probably thinking, okay, we can't have our major supply line choked by human stupidity. What are we going to do about this?
It's a great question, and I mean, what are the odds that the ship that gets stuck was making that type of formation? I would say it is pretty remarkable. It obviously must have been a very hard and fast ship there, but anyway, it's one of those situations where can this rare event be avoided in the future? I don't know. It doesn't seem like it's happened very often in the past. So I would say, again, the markets won't at least look at it and say, oh my goodness, we need to prep for this in the future. I do think maybe they need to dredge a little bit more of the Suez Canal. So maybe the ship won't get stuck as much. I don't know if they can widen it. Maybe it's too big of a monetary thing. But when you have so much of the world riding on something like this, it wouldn't be a big thing for me to think that a world organization would come in and say, hey, we will help fund this because we all as a whole world rely on getting these goods through the Suez Canal.
Well, I was just reading stats. The canal ships over 10% of global trade and 7% of global oil. I mean, this is not an insignificant passageway.
It is not. It is not. So, I mean, I think when it comes down to it, the world needs to look at it closely, but I think it has to be a world event. I wouldn't want to see the U.S. saying, hey, we'll fund it ourselves. I think we could participate in that, but it needs to be, if everyone is benefiting from that Suez Canal, then it needs to be, analyzed to see, okay, how can we avoid these future issues? Because, listen, the world economy is recovering right now from COVID. We don't need any more obstacles in the way of this recovery with the global economy, really.
All right, fair enough. Okay, let's get into the chart game, Gareth. I'm excited. What have we got for us today?
All right, I don't know.
Well,
let's see what
the game. Let's talk about. Let's just go over the rules of the game for those viewers who have not seen us do this yet. So what this is a technical analysis game. The game will generate. It's called chart game. The game will generate a random chart, It's actually based on a real life stock, but it won't tell us the ticker, it won't tell us what stock it is, and it won't tell us the time frame. And all we have to do is select either buy, short, or next bar. So you've selected the swing trading option, which gives us a slightly longer time interval than the day trading option. So without further ado, let's begin.
Right. Get it
I want to
started.
see and walk us through your rationale as you're doing this.
Absolutely. So just looking at the chart, that was the first thing I did. I scanned the entire chart that's shown to me, and I see lots of support right here. The stock moved lower here, but then was able to recapture that support. It's down here again, and it's able to recapture it. So right now, it looks like it's trying to hold support, even though it could inch down just a little bit. So we'll give it a shot here, and I just want to see what the next candle does. It's a little bit of a downtick, and I'm going to pick up a little bit there. Okay, so we bought there, starting to move up a little bit, starting to move up again. Oh, there we go. All right, let's take that gain, almost $4,500. We'll bank that. Let's see what we have here. Starting to consolidate, I like that consolidation. Let's buy it again. Looks like up 130 bucks on that buy so far. We'll go to the next bar. Whoop, down a little bit here. That's a pretty nasty candle, but we haven't taken out support here. So we'll continue to hold it. Down a little bit more, still in support. Oh, now that's not looking pretty. It's into support. If it breaks here, we'll have to exit. Oh, bouncing a little bit, bouncing up a little bit. We'll keep holding it. So still holding this lower level of support. That's basically my eye. See right here and right here, and you've just tested that. But if that breaks, then I would exit it. Up again. Still holding. Now it's starting to move up here and then down again. A lot of chop. And this is a trade where on a daily basis, you're just starting to chop around here. I'm starting to not like the pattern as much because it keeps on hammering on this support. So let's see here. We'll give it one more candle to hold up. Still there. Now it's lower, so we're going to exit. And it did go lower there, so that's the right move on that front. Now let's see. We are down into this next level of support, so what the heck? Let's give it another buy to have some fun. Up a little bit there, up a little bit more, down, down again. Not good. You might be donating there. Let's see. I'm gonna have to exit that again.
The momentum does seem to be does seem to be down, does it not, Gareth? I wonder why you're just not writing it out and waiting for it to tick up. You seem to be going in and out a lot. Is that kind of your style?
Yeah, well, on a daily basis, and especially, listen, when you're playing one of these games, right, we only have a limited of time. It's eventually going to say, okay, the game's over. So my goal is to, if I know that end is coming, it's my goal is to make sure that we get in and we get out where I can just make some money there. So that's kind of it. You kind of have to take these games with a grain of salt in that respect, where I don't have unlimited amounts of time to hold it and just kind of see when it starts to turn around, right?
In real life, you would probably base some of these trades on news as well, or any macro events, or would you ignore everything and all noise and just focus on the price chart?
Yeah, absolutely. No, I ignore most noise, but you obviously have to take into account, if a Fed decision is coming up, you want to be aware of that. You want to be looking at other macro patterns. Like, for instance, when I'm in a trade, I'm going to look at what the S&P is also telling me. If the S&P is telling me the market's going to come down hard, I'm going to be a lot less likely to buy a stock unless the setup is really, really good. Okay, so let's just see what we get here. Down a little bit more, so that exit was good so far. And now this is a tricky situation, right? Because if they don't show me a lot of data going back, so now we're basically below. So here was the earliest low pivot I see is over here, and we're below that. Now it is getting to be an oversold situation. I just wish I had more data, and this is where I would go to my daily chart or my weekly chart, and I'd zoom out on it to try to look for those.
You can put indicators. Actually, you can select indicators. So if you go, so you see the trades tab right next to that. Click on indicators. You have a bunch of different things if you want to put in your moving averages. If you go down, I think there's Bollinger Bands as well. I'm not sure what you like to use.
Yeah, perfect. I'll just use the moving average. And again, you can see we're below the moving average there, so we'll keep that. Pause there. Nice. See, down again. So again, this is the interesting thing as a trader. Sometimes exiting, even if you're taking a small loss, is the right move if the chart is telling you it's going to go lower. And that's exactly what we've done here. Is protect ourselves and basically taking two smaller losses versus just holding on and taking a bigger loss. Little bit of a bounce there. That's a reversal candle, so that might be a positive. Let's see what the next candle does. No, right back down. All right, but you are starting. So what this tells me here, folks, just to walk you through my mindset. So we had a red candle, a wide range bar red candle. Then we had a reversal candle. Now we had a green. But this is showing buyers are beginning to inch in here a little bit. So let's just take a look at the next one. Little bit of a doji there. I'm going to go long here and see what happens. Down a little bit. Down, little bottoming tail. Still weak, though. Still weak. Starting to uptick. Oh, and then it cut me off, I think.
Whoa.
Oh, no. Whoa. There you go. Holy
that?
cow. It must have had news. There you go.
Look at that volume.
How about that? $52,000, $52,340 P&L.
Wow.
That's
imagine if you had shorted.
So let me just say something to you guys. And so what I saw here is why I started to get interested, right? So these reversal candles began to show. So you had the green reversal here, then you had a little kind of a little tail which showed buyers and then sellers, and then you had the bottoming tail right there, and then flat, and then a little uptick. So this was showing a bottom here. You saw institutional probably accumulation starting here. And again, that got me in the point of saying, okay, something could be on the horizon here. Now, listen, let's be honest, David. Did I know it was going to go to $72? No. But it was telling me something was going to go up.
Maybe you're on the board of directors of this company. Who knows?
Maybe I secretly knew what this company was.
Yeah.
Now I'm kind of curious what stock it was. I bet someone in your comments on Twitter could probably recognize this chart and tell us what it is.
The game will tell you once it ends.
Oh, all right. All right, well, we're going to sell. I mean, listen, I'm not greedy here. Let's book that. I thought we were done.
Why are you... Hold up. Why did you sell that? Why didn't you write it out?
Because, I mean, do I look a gift horse in the mouth? I mean, if someone's going to hand me that type of gain, I'm a sucker for taking it. I got to be honest. And look, it's pulling back.
Okay.
Maybe we'll go long. Maybe we're getting a bull flag here. Let's see what we get here.
You could just do nothing for the rest of the game and you'd be up, right?
Yeah, but that's no fun. Let's buy it here again.
You're up 36% right now.
$315, 700. All right, let's sell it. Let's keep going.
So what's going on right now? I'm not seeing a lot of volume. I'm not seeing a lot of momentum either way. Is it consolidating? Is it getting ready to move?
So this looks like it's consolidating, but anytime I see a pattern with this type of gap up, my brain right away goes to, was it bought out? And so I just wonder if they somehow gave us a chart that was bought out. And you know, when a buyout occurs, a lot of investors will say, hey, should we buy it here? And I say, well, the company was announced at a buyout at, let's say, $73 or $74. So you're really not going to go that far away from that price. So if this was a buyout, then that would be a situation where it probably won't go too far, but maybe it wasn't. Again, this is the tricky thing about the game. I have no idea what this symbol is, what this company is. So I don't know if it was bought out.
Now, one question about the volume. Now, I've noticed that the volume didn't really die down until several sessions later. But how do you read volume, Gareth? Because even though the volume was elevated compared to where it was before, we still didn't see any significant price movement.
Yeah. So again, and just going back to prior to this move, guys, notice, for those of you watching at home, notice how small the volume got down here. So that tells you that the selling pressure was also abating, where it was just going sideways on very little volume. And that's another little indicator that the sell pressure may be over, you know? And so, for instance, when you're looking at some of these China names that are getting crushed right now, or a Viacom or DISCA, when that volume really starts to trail off too, that's a good indicator that the bottom, at least the selling pressure, might be gone. But it looks like, so just the way this is traded now for the last, I mean, this is a daily chart, so this looks like the last month or so, this has to be a buyout. And then there were just the first few days after the buyout was announced, there was a lot of people probably exiting the trade and saying, okay, it's bought out for this price. And if we just keep going here, yeah, look at that. So it's basically flattening out here, and it's got to be a buyout. So just interesting stuff. I'll just keep clicking it until it ends the game. There it is.
Oh, all right. ROH. I'm not familiar with that company. Between 2006 and 2008.
There you go. Wow.
So you made a profit of 47%. Congratulations, Gareth. Well, what was the agreement? You have to, yes, you get to decide which charity you like to donate it to. So we'll be looking forward to that announcement on social media, I presume.
Well, in fact, I'll say it right here, and then I'm gonna do it to Wounded Warrior. We'll donate $1,000 to Wounded Warrior, and what I'll do is I'll show the receipt next time I'm on. So I'm always about transparency. I want people to really understand that we're actually doing these things. So I'll show you the receipt that I get. I'm assuming they'll send me a receipt for the donation, and then we can show it on the next broadcast when I'm on with you.
Okay, great cause, and thank you very much, Gareth. I'm sure our viewers have appreciated not just your education, but also your donation to your charity of choice. Thank you very much for coming on today, and let's follow up next time.
Absolutely, David. It was so much fun. Thanks so much.
All right, and thank you very much for coming on. Thank you for watching, and we'll be back for more. Stay tuned.